Hi everybody, this is Aphria from MyChartCoach.com, and in this video we're going to take a look at the Canadian marijuana sector. Okay, so first up we're going to take a look here at the marijuana index. Okay, and so this is the Canadian index that we're looking at. And as you can see here, it was up 1% on the day. It's been in the sideways channel. You could see it was downtrending and then it went sideways, and so it has some room to head higher here. Back in January, it was all the way up here at 1,000. It's down here at 600. You can see it's been holding this 600 support zone, and so what we're looking for is a run up leading into the Canadian legalization that's coming up. The vote is on the 7th of June. As you can see here, ironically, the United States index is actually doing better. You can see here it pulled down, and then it's actually been running while the Canadian index has been flat. And so yeah, we're going to see here if the Canadian index can catch up. The overall North American index has been strong. You can see it's breaking out here, and so combined with the two indexes, you can see it's right here at this 268 level. It's going to be the big level to break, the 260s. If it can get above that, that should be the signal that the entire North American marijuana sector is breaking out. I will do a North American video. I'll try to get a North American video out tonight if I can. First up, let's take a look here at let's see here. Let's look here at Canopy Growth, and Canopy Growth here is up 5% on the day. It's been making this really nice run. It's up let's see, it's up 2 days in a row, and so it has this nice uptrend going, riding EMA 4 support over here. It's hitting the 31 resistance zone, so that closing price on the 22nd is the key level to break. And so what it needs to do is get above that closing price on the 22nd. Close above should be the signal that it wants to head higher. If it fails to break that level, this would be a temporary top, and then what it's going to need to do is bust through the top of this ascending resistance line and bust through 32, and then you'd be looking for a run up here to 34. 34 was the high close from back here in January, so that is the target if it can break above 31. So tomorrow's going to be a big day. Look at the big volume down here. CGC is Canopy Growth, formerly ticker symbol TWMJF, over the counter. It trades WEED on the Toronto Stock Exchange, and now that Canopy Growth is trading on the New York Stock Exchange, it does have options. So you know, you can trade options similar to Cronos. Okay, so we're going to look for a possible break above 31 for Canopy Growth. Now, Cronos Group is another stock that trades on the big boards. This trades on the NASDAQ, and it also has options. This is incorrect. It does trade options, and so this is pushing higher after closing above the descending resistance line in this symmetrical triangle pattern. So you have descending resistance and ascending support, and so on the candles came to a flex point here, and on Thursday it had closed back below the red descending resistance line, and then on Friday there was a nice break above. Also, the key level that broke above was that green line. That was the level we were looking to break, and that was the 50-day simple moving average at 64, and so that was, anybody that was watching this on Friday or trading it, it was really strong in the close. You can see there's no upper wick. It closed at high of day, and then there was nice follow through today. It didn't take off hard, but you can see there was a nice volume spike today. There was big volume, and it did push higher. The next key level to break is going to be this 100-day simple moving average at 727. If it can get above that, then 775, which was the high close from back here in April, would be the next target. So those are the two levels to break above. As long as EMA 4 at 668 and the 50-day simple moving average at 644 are holding, this uptrend is intact and it should continue. Okay, let's take a look at a couple of the ETFs here. This is ticker symbol MJ. This is the Alternative Harvest ETF on the American Stock Exchange, and this isn't a pure cannabis ETF, but you know, it does have the Canadian stocks, marijuana stocks in here, and it has like Scott's Miracle-Gro, and has exposure to the cannabis sector. And so what we're looking for here is this break above the 300-day simple moving average, currently at 30.25, and so it's hitting that line right now. That's the blue line. If it can get above, then the next two levels to break are going to be up here, the red and gold lines. That's the 200 and 100-day simple moving averages. If it can get above that 100-day simple moving average at 31.36 with the close above, that should be the signal that it's finally ready to head higher. It's been in this consolidation pattern. It's been working, you know, sideways between this 31 and 29.50 level, and so we're going to see here if if Canada legalizes marijuana, if that pushes the MJ higher. So take a look at Horizon's Marijuana Life Science Index ETF. Now this follows the Canadian marijuana sector. This is the over-the-counter version. An F on the end of the ticker symbol means that it's foreign, and this trades over-the-counter. It's a thinly traded ETF, only 59,000 shares traded today. It has an uptrend going. It turned the green line and the dotted purple line, the 50-day simple moving average, and the middle Bollinger Band into support here. As long as they hold, as long as it's staying above the middle Bollinger Band at 13.59, this uptrend's intact. What you're looking for now is a break above that gold line. That's the 100-day simple moving average at 14.33. If they can get a close above that level and turn it into support, that should be the signal that it wants to head higher. So keep an eye on that. We're looking for a break above that level. As you can see here, it also needs to break above high close resistance, which is just below. It's the closing price there on the 23rd, and so this top of this white candle, and so that's lined up at that 100-day simple moving average. If it can break above that 1430 resistance zone, that should be the signal it wants to head higher. Now, if you look at HMMJ.TO, this is the same ETF, but this is the Toronto Stock Exchange version. And so as you can see on the Toronto Stock Exchange, this has much better volume, 450,000 shares traded today. It's actually has a more bullish chart as well. I'm not exactly sure why HMLSF is lagging behind, but it is. You've got a close just above the 100-day simple moving average for HMMJ today. Okay, so that's the first close above that level since back here in March, before support broke here. The support broke on the 27th of March, and you know, it got that downtrend going. So it's been a couple months since there's been a close above that level. So right now everything's riding on this gold line. As you can see, back in May when it tested the 100-day simple moving average, that signaled a temporary top and it pulled back. And so if it can stay above that 1806 level, that should be the signal that HMMJ and the marijuana sector wants to head higher. And then what we'll be looking for is a break above this 860 resistance zone. As long as the middle Bollinger Band at 1753 holds, this uptrend is intact. If it were to break and there was a close below, that would put the 50-day simple moving average at 1678 on deck. So if they fail to pass to legalize marijuana in Canada, that might create a pullback. I mean, I think the general consensus is if it passes legalization, it should be bullish for the sector. That would be common sense. Okay, let's look at take a look at this IPO here. This is a marijuana sector IPO, the green organic Dutchman. This was featured in Motley Fool. They discussed it about being a takeover candidate, and as you can see here, it's been on one heck of a run. It has an increasing volume pattern as it's breaking out higher. This is on what we call a blue sky breakout. There's no overhead resistance. The only resistance is this upper wick here. So the top of this candle is the close at 542, and 560 is the all-time high. This is the complete history. This stock started trading back here on the 3rd of May. That's the first candle, and you can see this is the whole history of the trading of the stock. And so it's on blue sky breakout mode. It's just trying to push higher. It's getting frothy here with the candle up above that upper Bollinger Band, but you never know how high they're going to take it. As long as the EMA for it at 478 is holding, the uptrend is intact. If if there was to be a close below, that would be a bearish change in trend. The last close below was back here on the 16th, and then it could take a pause. As long as it's holding, the uptrend is very strong. So we'll just have to see how high they'll take this. Keep an eye on this marijuana sector IPO. Take a look at Aurora Cannabis. Okay, so this is considered the second top marijuana company in the world, and out of Canada as well. All of these companies in this video are out of Canada. And so it's been setting up. Look at all the candles hitting the green line. That's the 50-day simple moving average. It's formed a descending triangle pattern. So you have descending resistance, and then you have horizontal support. And so one of those two levels is going to break. Descending resistance is lined up with the 50-day simple moving average. And so if there's a break above 644 and a close above that level, that should be the signal that it finally wants to head higher. As you can see, they have the computer program set up to not break that level. Once it finally breaks with a close above, the close is key, that should be the signal. Now it has horizontal support as well. Notice how all the candles are bouncing off this dotted purple line. That's the middle Bollinger Band at 624. That level has to hold. If that were to break, that would signal downside risk, and then you would see the 200-day simple moving average at 580 tested. To the upside, what you're looking for is a break above high close, which is right here on the 21st. And so if there was a break above that level, then that's where it could get moving. You know, you have the 100-day simple moving average way up here at 773, and then you have this top right here on the bottom of that candle. So yeah, so keep an eye on it. We'll see if it can break that 50-day simple moving average. Let's look at APHQF. This is Aphria, another one of the top cannabis companies in the world, also considered a takeover candidate by Canopy Growth, as was mentioned in the Motley Fool. And so a Motley Fool online, and you can see the charts heating up. You've got RSI back above 50. You've got the crossover here on Fasto. You've got a crossover here on ADX. And so today there was a close back above that 200-day simple moving average. That's the red line currently at 922. That had been resistance the last few trading days. So the close above that and the middle Bollinger Band signals that this uptrend is still intact at 927. It needs to stay above both levels. And then what we're looking for is a retrace back up to this high close resistance zone around 215, 220. And if it can break above that, then the 100-day simple moving average at 1081 will be the next target. It has to stay above this support zone. You can see it came down and tested the 50-day simple moving average at 873. It signaled downside risk if it failed to hold that 50-day simple moving average. It looks like it's trying to hold support here and then make a push back up into the 10s. Okay, let's look at MedReleaf. Okay, so they've had an offer by Aurora Cannabis here to be bought out, and so since that deal was announced, it pulled back. I think this is the action. It was like announced on this candle here. You can see the black candle form. There was this huge volume spike, and then they sold it off. It pulled back. It bounced off the middle Bollinger Band. That's what you want to see. The middle Bollinger Band is also the 20-day simple moving average. It's currently at 1903. That level is being tested right now. Look at how the candles here are hitting that dotted purple line. Last time that happened in May, the support held, it bounced, and it headed higher. And so you're looking for that to happen again here. If the middle Bollinger Band holds, it is the reload zone. It's the bottom of the bullish upper Bollinger Band channel. And so for stocks heading higher, the middle Bollinger Band is the bottom of the channel, and the upper Bollinger Band is the top. And so right now it's at the bottom of the channel. If this level can hold, if it can stay above $19, then it could run back up here to test the $20 level. If it could break above 20 and get a close above 20, that should be the signal it wants to head higher. You can see as a descending resistance line here. It has a descending triangle pattern. You have descending resistance and horizontal support. And so a close above resistance signals it wants to head higher. A close below support signals downside risk. Okay, let's take a look at OGRMF. Okay, so this is OrganiGram Holdings. So this one went sideways here. It's also another takeover candidate. And so you can see they mentioned the takeover, and it ran up, and then it's gone sideways. And so it's all about $4 on this chart. If it can break above $4 and get a close above that level, then it could run back up here to 440 zone. That was the high close from back here in January, on the 24th of January. And so that's the upward target above 4. Now, if it fails to hold EMA 13, that's the orange line here at 378. That middle Bollinger Band at 371 will likely be tested. It has to stay above the middle Bollinger Band to keep this uptrend going. If it were to close below, that would signal a possible start of a downtrend, and you could see that 50 50 and 100-day simple moving average is tested. Similar to back here when there was a close below the dotted purple line and the 100-day simple moving average, you can see it ran all the way down to the 200-day simple moving average. That's why, you know, it's a risk to hold long when stocks close below that middle Bollinger Band after trading above. Okay, take a look at IMLFF. All right, so keep an eye on this one. It's another setup pattern, very similar to ACBFF, to Aurora Cannabis, in the sense that it's just all these candles are hitting the middle Bollinger Band, the 20-day simple moving average, currently at 80 cents here, 7.99. And so look for a close above 80 cents. If it can close above that level, then it should run up here to the 50 and 100-day simple moving averages between 90 and 96. You know, if it were to drop below that 200-day simple moving average at 74 there, the red line that's been holding, that would signal downside risk, and then you could get a drop down to the 300-day simple moving average at 611. Keep an eye on that 80 cent level. Trading above 80 cents, closing above that level should be the signal that it wants to finally head higher. Okay, take a look at NXTTF. All right, so this chart is heating up as well. You can see the Canadian stocks have been in this holding pattern, and you can see it's hitting the 50-day simple moving average and pulled back. And so now you have basically this, you know, you have what we call a flex point, and it's between 50-day simple moving average resistance at 125 and 200-day simple moving average support at 106. One of those two levels is going to break. A break above 125, a close above that level should signal it wants to head higher, and it should run up to the 100-day simple moving average at 152. Fail to hold the 200-day simple moving average at 106 would signal downside risk, and you'd likely get a drop down to 90 cents to test that low close from May. So yeah, so this is what we call a flex point. A move's going to happen soon here. It's going to either break out to the upside or break down to the downside very soon. Today, it's hitting that middle Bollinger Band at 117. That's the key level. When candles are forming above that level, it signals an uptrend. When they're below, it signals a downtrend. Right now, as you can see, this has been in a tight pattern. You know, between high close and so you have basically this you know, sideways channel. You know, it's been very tight. Yeah, we could take it another level here, and so yeah, so it's back in this previous channel from over here. It closed just above, so it's back in that really tight sideways channel from back there in April and in May. And so what it has to do is break above the top of the channel. It's about breaking high close resistance, the top of the black candle here, the top of these white candles, and then that's a signal that it wants to head higher. Right now it's back in the bottom of this channel, so it should get a run if it can get above 125, back up to test that 139 resistance zone. Okay, let's look at SPRWF, and also like take a look at the volume. So that's always what you want to see down here. Check out the volume spike. So that's a good sign. You want to see that on a break above resistance. It was the largest volume day in 3 weeks, and it closed above, you know, right at resistance here. It looks like the chart's heating up. Okay, let's look at SPRWF. This is the final stock in this video. This had a nice break above resistance. You know, I remember I did alert it when it was down here, and then it did run all the way up and got above that 200-day simple moving average where it stalled out, and then it had that multi-day pullback, and today it finally bounced. It's hitting the key support zone. It's right here where the 350-day simple moving averages are meeting between $1.27 and $1.29, and so basically what has to happen has to close above the EMA's 4, 8, and 13, the pink line and orange lines, and that would signal that it wants to head back up to that 200-day simple moving average. So it's right there. It's trying to bounce. It formed a bullish Harami reversal pattern today, so we'll be looking for a bullish reversal confirmation, and then a close above 132 to signal that it wants to head higher. If it were to drop below 1274, the blue line, and close below that level, that would signal downside risk, and then it could drop down there to test that low from May. So the downside risk below this 1274 is 117.5. If it gets above that 132 level, you could see it run up to 140. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. Okay, thank you.